Thank you for staying with us. For more than a decade, Nigeria has operated a multiple exchange rate system where dollar and other foreign currencies traded at a certain rate at the Central Bank of Nigeria and another rate at the parallel market. But with President Tinubu's administration changing the status quo by unifying the exchange rate where every market trades at just one rate, the International Monetary Fund has supported this decision in order to improve the influx of money while attracting more investment and boosting economic stability. The Central Bank of Nigeria, in support of this move, has also lifted the limits placed on domiciliary accounts. In a statement by the CBN on Sunday, the new regulation allowed account holders to deposit freely, have unrestricted access to funds in accounts, and make up to $10,000 withdrawals daily. Although some analysts have advised that these decisions should be taken only when Nigeria has improved foreign exchange earnings from non-oil sectors, increased exportation amongst others. Officials from the International Monetary Fund says this would mitigate the economic effects of forex reforms implementation. Well, joining us via Zoom from Ibadan is a public finance and policy analyst, Olusegun Elemo. Good morning. Thank you for joining us.
Yeah, good morning to you. Happy to see you. And good morning to Nigerians.
It's good to see you as well. Now, there's been so much confusion in the air with regards to this matter of floating the naira. Some Nigerians do not really understand what the government is trying to achieve or what floating the naira is really about. So if you could just begin with breaking it down so that our viewers can fully understand the intentions of government.
Well, thank you for the question. The intention of government is to ensure that the economy is properly managed in such a way that what you've had in the past, where you have multiple exchange rates, one for official, in fact, there was a time where you had about 3 exchange rates. And that certainly is not healthy for any economy, because one way it puts investors off your market, so it limits foreign direct investments into your country, and then depositors ordinarily won't have confidence, to patronize, the official window. As such, it puts pressure on businesses because entrepreneurs, businesses, and companies now have to resort to another kind of market to access the foreign exchange, with which they then manage their business, whether importation, whether export logistics, whatever it is. What that also means is that it put pressure on prices of commodity in the market. And then the biggest elephant is that it creates room for massive corruption because of the arbitrage in the system. And that's certainly not healthy for any economy, and it's not in the interest of the ordinary Nigerian. I think what the government is doing, or the policy decision to harmonize the exchange rates, it's a welcome development. It's one policy decision that many of us have clamored for, even since the last administration. So it is good that the current president, thought it wise to then go after this, and then the central bank is all out to achieve that. So this is indeed, we'll put the economy on course. We will make sure that all players, all stakeholders look in one direction. And whether you are getting your forex from the parallel market or from the official window, I think the most important thing is that, whatever price gap it is from the parallel market and the official window is not so wide, as such to encourage people to then patronize the official window, And I think even as at today, people will naturally patronize the official window if the FX liquidity is available and, people are able to meet up, with their demands for FX.
All right, Segun, talking about liquidity, I believe that is one of the major challenges that everyone has had, and that was what partly led to some of the restrictions as a way of keeping liquidity within the country. But how does this unification address the issue of liquidity, the liquidity challenge that we have always had? How does this, resolve that, if it does?
Well, the unification itself does not address the problem of liquidity. What addresses the problem of liquidity is whether you're able to export your products, your services, and then to be able to, attract inflows. And whether you're able to leverage your diaspora remittances to attract FX inflows. I think those are the things that addresses the problem of liquidity. The issue about unification is such that the market is already distorted by having multiple exchange rates. And what you have already in the official window is not reflective of the state of the economy. And I think that's the problem that many players, stakeholders had issue with. That's the concern, that what you are quoting as official exchange rate is not reflective of your economy. Even though what you had in the parallel market is also a bit far away from reality. The most important thing is that, we are now coming to terms, to be honest with ourselves, to say, okay, what is the real value of Naira today? And what should it be quoted, officially? And I think that's what is now playing out. And the central bank now, giving the DMBs the opportunity to say, okay, you can determine the price of Naira based on, the state of the economy, and the official transactions of government will then be determined by, the previous, exchange rate. The exchange rate for the previous, working day. So I think that is the concern, and what the government is now trying to address is such that all players will then look in one direction. But like I said, liquidity, the availability of FX liquidity is important, because if you are asking people to then look in one direction, it means that, all the demands will then come into that window. Would you be able to meet up demands? I think those are, other concerns that will then, come up as we move on in this whole policy decision, as the central bank continues to implement the policy.
Right. And I would like for you to address these concerns, because some experts have also expressed concerns as well as risks involved with regards to this decision to float the Naira. The volatility is one issue they have been talking about, especially how it affects inflation as well as our debt obligation outside the country.
No, certainly for debt obligations, I think now our debt to GDP already has increased from what we had last time, simply by devaluing the currency. And then it also means that our debt to revenue has also increased. And the cost of servicing debts has also increased, it's gone up. So these are the implications. But I think by and large, it's a good decision that we then come to terms. What the positives are, is that government revenue is likely to then increase. So our revenue to GDP is going to go up. But well, you see, some of the problem is that the downsides, come up, like it's an immediate effect. The upside, it takes time. Because we're talking about revenue to GDP now, it's going to take time before government starts to earn the revenue. Yes, the pump price, the subsidy has been cut off, so the leakage in that regard is been taken away. So you expect that government will now begin to have more savings towards its own obligation, and I think that's a very good one. So there is the upside, there is the downside to this policy, But I think by and large is that largely stakeholders largely welcome the development. And I think the multilateral institutions and international financial organizations have also thrown their weight behind the policy to say, okay, this is what we've been clamoring for. But again, is that you see, while we are discussing the positives and the downsides of this policy, it's important to say that, and I think that's why the IMF also gave the indication that, you see, it's not just about unifying the exchange rate. It's not a one approach solution. It's that the FX implementation regime must be managed in such a way that fiscal riskality or abuse of privileges doesn't come in. And why do I say that? Just yesterday, the central bank also issued certain guidelines, which then allows people to then begin to withdraw up to $10,000 a day. I know that is, for me, I mean, I'm trying to see how best I can describe that, but I don't think it's responsible for us as a country. While we are trying to address inflation issue, FX pressure on commodity prices, you are trying to manage, and again, is that security concerns are also part of this whole issue. So allowing people to then withdraw FX of, that amount of volume, I don't think is responsible for us to do that. Again, is that we are not, our official, currency in Nigeria, it's not dollar. It's not dollar. So you can't denominate, commodity prices in dollar. Again, is that why would people then need that volume of, currency, FX, dollar precisely, daily basis? No, it's not responsible. What I think that we should then, focus on is that whatever fiscal transactions that people need to carry out in terms of FX, we should be able to monitor it electronically, and then that will curb, irresponsibility in the market. Mind you, this is a market that is largely unregulated, very fragile. Many of the BDCs, Bureau de Change operators, are undocumented, and you know it. If you go to any Bureau de Change, environment now, many of the players there are undocumented. So if you then say that they can walk into a financial institutions every day and then take out $10,000, I don't think that is the way to go. But again, is that I understand that the central bank is trying to encourage depositors to come forward so that they can then ramp up FX liquidity, like I said. But you cannot, in one hand, be managing a system that is so fragile, and then on the other hand, then throw the window open and allow everybody to come in and go out, at free will. So I think those are issues that we need to focus on, and the central bank will need to be very, very responsible, in managing this whole FX regime.
All right, Segun, with this unification now, you were recommending, or you were saying earlier that ideally the rate between the official rate and the parallel rate will be so minimal that it won't be that visible. Now, if this happens and we see a situation like that, how does it impact the undocumented guys who are always on the streets with dollars and calling for dollars and all? Does it wipe them out, or how does that? Please walk us through. Let us understand that.
Well, it will not entirely, wipe them out, but gradually it means that patronage will continue to shrink on that window. And once it continues to shrink and shrinks further and further and further, I think it's just, the simple law of economics. When there is no demand, on that, supply window, and then people will naturally go off the market. I think it's very, very simple. The problem is, will the official window now be able to meet up with the demands? And I think that's where the CBN is also saying that, you see, the 43 items that have been, restricted from FX access should stay. Well, some people are saying that, some policy analysts are saying that, well, they don't think that is healthy. If you say you are floating the naira, then there's actually no reason why you should restrict any, product or commodity from accessing FX, or any importer from accessing FX for a particular commodity. Again, is that we have to look inwards to see how we, encourage local production. So if those 43 items, for instance, we are self-sufficient in them, and we must be very careful in this regard so that we don't further put pressure on the growing, FX system that we're currently, trying to build. Is that if those 43 items that have been restricted hitherto, if we are self-sufficient, then we can continue to restrict them. But if we are not self-sufficient in this regard, it will make sense to allow some of those items to then access from the official window. Because if you allow those items to be accessed from the parallel market and we are not self-sufficient in any, then means that when they bring them in, it will compete favorably with local production. And if it competes, favorably and very well, it means that Nigerians will ordinarily patronize these commodities than locally produced commodities if they're not able to compete very well in the market. So, but I think back to your question on whether these guys will be taking off the market, the undocumented bureau de change operators, I think is more about whether the official window is now able to meet the demands that will come forward.
And that's the question on the lips of a majority of experts talking about supply. If the government will be able to meet up with demands, what do you see happening?
Well, I think for me is that I think in the interim, in the short term, government should be able to meet up with the demand. For instance, you know that the subsidy on petroleum products have been taken up. So government will then have savings in that regard. If the Dangote refinery comes on stream, it means that our FX for importation of crude of petroleum products should then reduce. Gradually should reduce. And then if we then are able to bring up the refineries that are currently being turned around and being rehabilitated, it means that we should then be self-sufficient in terms of our consumption for PMS. If we are now self-sufficient in our consumption for PMS, then it means that there's no that large pressure on our FX, on our FX reserve, and then government will then be able to meet up with FX obligation, whether to third parties or to people who needed to go to school, for medicals and things like that. But I think the most important thing is that we then even continue to cut down on education tourism, medical tourism, because these are also things that put pressure on our FX reserve. So if we're able to cut down, and that's why I also welcome the development, the policy decision of government to then give loans to students, because it then means that we will expect, what I envisage is that in the next couple of months, there will be certain reforms in the education sector that will then, possibly make the university or tertiary education, autonomous as they should. If they are that autonomous, they'll be able to determine their fees, and then government can then, provide fiscal support to those who are not able to afford the prices of or the cost of education at that level. And then if they're able to, the system will be stabilized a little bit. We're able to cut down on education tourism, possibly, less and less Nigerians will then go abroad to study. And then again, if we're able to fix the health system, also is that less and less Nigerians will go abroad for medical, attention. Those are things that will, lower the pressure on our FX, and then it will strengthen the Naira. The problem I see with Naira not being strengthened is when you then allow people to then access, FX. For instance, $10,000, dollars daily. No. I'm not in support of that. I can't support that kind of policy decision, and I hope that the central bank will review that policy pronouncement. Allow people to come forward with their deposits if they want to. If they want to hide their FX at home, let them hide their FX at home. But don't throw the window open and allow people walk into the banks, in and out, and then take out dollars and then go on the streets and then dollarize the whole economy. No, that is going to, be to the adverse effect of the Naira. And I don't think that's what we want.
Okay. Now, over the years, we've seen how the naira has been tied to the dollar, where when we are looking at our foreign exchange, it is always and usually against the benchmark of the dollar. Now, recently, there has been the BRICS, and the BRICS factor is coming on board, where a lot of countries are applying to join in the BRICS and, come up with a system where there's a new currency on the block that will rival the dollar and all of that. Now, speak to us from that window. What scenarios can play out if the BRICS eventually come up with a currency and a lot of countries would like to deal in that currency instead of the dollar?
Well, I think that there is, because basically the dollar had hitherto, dominated the global market. I mean, if you travel out of the country, the easiest currency to change to is the dollar because it's widely accepted. This new move by a few, power blocks coming together to say, well, it will take time, but if it then scales through, it then means that there will be certainly there will be pressure on the dollar, and it will hit the U.S. economy very, very well. And I think I'm sure the U.S. government is also, going to be responding and lobbying, certain power blocks to ensure that the dollar stays the way it is and possibly continues to strengthen up. For me, is that if you are trading locally, you should be able to trade in your local currency. I think that's the point one of the African leaders made recently. I think it was perhaps maybe the Kenya president or one of the African leaders made that comment recently. I think that conversation it's been in the that conversation has been around over some time now. That if you're trading locally, you should be able to trade in your local currency. If you're trading and you're trading with the U.S. government, or you're trading with allies of that economic, then you can then trade with that currency. I think is that now bringing it home again is that the idea that we don't trust our currency enough to be able to want to trade with it, or we're not confident enough to stay with this currency and make demands in this currency. For instance, why are we selling crude and requesting for our crude to be bought in US dollars? Well, you can say that because we need to build our FX reserves and shore up the gaps in the economy. But again, is that why not sell the crude in naira and let people go and look for our naira and then buy our crude in naira? If those are the commodities and those are the products and our services that we put on the global market, we should be able to look after our own currency. Except if we then want to say that we don't want our own fiat currency to be in operation again, then we can just change and become a dollarized economy and let everybody continue to, whether locally or internationally, continue to trade in dollar. But if our fiat currency is still naira, I think we should do everything to protect the integrity of the naira and ensure that that currency continues to strengthen up. And the way to do that is to ensure that we don't put pressure on it by dollarizing the economy and continue to manage the FX policy regime.
Right. One other aspect that Nigerians are looking forward to is how this will boost job creation as well as investor confidence. This decision by government. Quickly.
No, certainly it will, because investors, give it to government. It is going to already. I think the stock market responded positively to this policy decision. And if the stock market responded in that manner, I think it was a 15-year high, for the stock market. If the stock market responded in that manner, I think it's that investors are now more interested in Nigeria. And take it or leave it, Nigeria is Nigeria is a beautiful place to invest. I mean, we have in terms of labor, you can get very cheap labor here compared to, so in terms of that, we have comparative advantage in terms of labor. The downside is the issue we have with security, and I think that's already been managed, very well. I think that should be managed, going forward. So And then again, is that the market is here. I mean, even locally produced products, we aren't even exploring, the market enough. So the beauty is that, the FDI window is open, and I'm sure that more companies will then come in. Confidence has been built, and once that is done, you'll then see this whole unemployment issue continue to drop, drastically. And that's why I said that we must be careful in implementing this regime. And I think that that's the same concern that the International Monetary Fund now has. That yes, we've taken the right step, but the subsequent steps that will be taken afterwards, must be responsible enough so that we don't jeopardize the gains that have already been recorded, and then we can then begin to address some local concerns like unemployment, like inflation, and the likes.
Right. Olusegun Elemo, public finance and policy analyst. Thank you for your time on the program.
Thank you for having me.